Hello, everyone, and welcome to your Onchain update for the 11th of August. I mean, I wish that there was some more price action to talk about. It is insane. I have never seen anything quite like this. Bitcoin is the most asleep I have ever seen it. It's basically going nowhere for days, weeks, coming on months at a time. I mean, the real hard question that it's when you look at a market that has gone this to sleep. I mean, Bitcoin is infamously volatile. Like, where is it? There's kind of a few interpretations, right? We are hovering around this kind of $30,000 level, right, just below it, which is essentially yearly highs, and was kind of the cycle baseline. And we've talked about this. We kind of expected it to take time to bust through this level. So, is this kind of complete boredom? Like, we haven't really pulled back, which feels like a constructive sign. We're consolidating below the previous cycle's baseline, which feels like a constructive sign. And yet it's also, well, where's the energy? Like, it's kind of this really funny thing. It's almost like Bitcoin's paradox, right? Like Fermi's paradox. If we're the only ones in the universe, well, where are they? Well, if it's bullish, where are the bulls? And if it's bearish, well, where are the bears? Like, the fact that there's just no momentum in either direction is astounding. It's such a fascinating thing. I truly don't have a good answer for it, aside from the market has no idea what to do. And there's also, I mean, one thing that is for sure, we don't have some kind of major capital inflow that's right. This thing isn't in a raging bull market, clearly, but it's also not in a raging bear either, right? It is the most neutral, not much that I've ever seen. Just before we get stuck into it, because we are going to try and see what data we can really ascertain some kind of directionality or momentum to this whole thing, see whether there's any shifts underway. But my kind of gut feel, right? If gun to head, what's my kind of general opinion about things? I still stand by my, and I've actually held this. I would say certainly for most of this year. Essentially, everything under 30,000 to me feels like what I would put, in quotations, as a value zone. Once you get down into the low 20s, that's where you start talking about deep value. So just to put this in a perspective, basically anything that's within the consolidation from June 2022 when Three Arrows blew up, I think we sold down to like 17K, and then we ranged up to 24, and then we sold down to 15 with FTX. That zone, that 24 to 15 zone, I still feel like is deep value. There's a lot of coins that were acquired down there, and I do suspect that that will happen again. I don't have high odds on us getting back down there, but they're still there. They're still 5, maybe 10% kind of gut feel. High 20s, or sorry, low 20s. I would still put a 25%, maybe 30% probability. So these are non-zero and, somewhat significant odds. Some kind of a sell-off or a trade up from here, it's a literal flip of the coin. There is no kind of read here. Now, as we get above 30K, I honestly believe that we enter a psychological price discovery. And that means that even though price has been there before, I think that the human mind in markets tends to be relatively short. And I think that if we do break higher from here, it's probably a very good sign. If we do break lower from here, it's not a good sign, but it's also not a very bad sign, right? So in terms of like a kind of skew on which kind of direction things are, I think a break higher is very good. I think that shows a lot of resilience and a lot of strength. I think a breakdown isn't great, but it's also not the end of the world. So therefore, to me, there's a bit more of a max pain to the upside is kind of my feeling. But at the same time, I mean, it's just nothing to go off. Anyway, that's enough of the intro. Look, we're going to talk about supply dynamics and spending and all that kind of stuff. I won't bore you with the intro. I think we've done enough. Let's get stuck in. Okay, so I've got a little bit of a mixture of things to talk through today. When you've got a static market like this, what's quite interesting is normally you'll find that I spend a lot of time with our realized profit and loss and spending behavior, because spending behavior is kind of what drives the day-to-day. Well, the day-to-day right now is nothing. So therefore, we have to actually go to and take a step back and look at some of these bigger picture metrics, often in the supply type domain. So let's just start and contextualize things, right? Where do we sit? So this chart here is looking at long-term holder supply in blue, short-term in red. And then this red zone here is basically showing you where short-term holder coins are, right? Where were they acquired? Now, we're pretty much at that sell-off we had back in March 2023. Short-term holder supply is breaking down to, I mean, it's not all-time lows, But if you really have to go back to the early days of Bitcoin to find lower levels. So we are talking about some seriously light in terms of active mobile supply. There just ain't much of it out there. Now, obviously, we've then got the converse, which is our long-term supply, which is punching to a new all-time high, 14.6, almost 14.62 million BTC. Now, the one region of supply that is not represented here is exchanges, because you've got exchanges plus short-term plus long-term equals circulating. But essentially, we're seeing exchanges declining as well. So again, long-term supply is coins that are actually going through that maturation process. When coins are withdrawn from exchanges, they will initially go into short-term, and then they mature, right, as they cross this age threshold, or more correctly, this age threshold moves forward, right? So we are seeing an extraordinarily low amount of liquid supply. So my big takeaway from this is that, I mean, people just aren't willing to liquidate their coins at 30K. And given the absolute disaster that the last 12 months has encompassed, right? This is doom, right? This is a complete doom bottom. Bitcoin was dead for 10 years, remember, when FTX blew up. The people who are still here are pretty hardcore, and I just don't see them going anywhere. And that's why I still think that this kind of sub 30K is in that value zone. Once we get above, I think it's a good sign, and I think that probably could kick something off. But I'm also quite prepared for this thing to still chop around in this range for 6, 8, maybe 9 months, right? So just be prepared for all circumstances. But nevertheless, this to me feels at the very least a piece of evidence on the side of the bulls. Certainly in the long term, short term a little bit harder to read. So on the short-term side of the equation, and we're talking about order of months here. This is a metric that a lot of people have been bouncing around, which is, I guess we're going to call it hot supply. It's basically looking at coins younger than 1 week. But one really interesting angle to think about this is actually to layer on, well, some of that trade activity happens in futures markets. So we've got our hot coins down here in the 1 week below bucket. And you can see these are getting really, really low. Like we are pretty much at all-time lows on an effective coin balance. But you can see there's been an uptick in futures volume and futures open interest, which is essentially going to absorb some other component of that buy side, sell side, right? Because some activity comes into the futures space. So, we're kind of at these cyclical lows across both of them, right? If you add these two together, the amount of like actual available supply is relatively small and constrained. And again, if this is kind of a binary system, if coins aren't in this hot supply bucket, then they're in the not hot supply bucket, right? And we saw that in the long term, things are just gradually moving up and up and up the stack, which is a really interesting dynamic. Now, just before I forget, actually, one thing I do want to quickly pull up, if this decides to load quickly enough, is, let me just show you, where is it? Where's my adjusted? Here it is, adjusted MVRV. So the reason why I want to show you adjusted MVRV, this is basically the realized price, but trying to account for lost coins. Now, in the very near term, I will have a very exciting announcement coming out that can probably help us explore this in a far more rigorous way, but I can't release that just yet, but sit tight. You can see that the adjusted realized price is sitting just below us, pretty much back at our, I think this is 25K, 25.8. We've got that level where if you take out all the lost coins, the reason why we take those out is that they're in a huge amount of profit. So if we get rid of Satoshi's coins, that means we can actually truly inspect the damage of people who bought up here, right? Because all the losses held by these guys are being offset by Satoshi's massive profits. So if you note, we're kind of sitting in between, just above this adjusted realized price. Now, I want to quickly jump across to one more model here, which is in our pricing models. Realize, where is it? You do a quick search. Here it is, realized to liveliness ratio. This is another interesting model, which is, again, trying to account for that, how much of the coin supply is dormant. Now, this particular model is actually much closer to the true cost basis of the market, and it's hovering here at about $32,000. So we are kind of consolidating just above and just below, because we can never perfectly estimate that cost basis, because obviously everyone's a little bit different and psychology shifts over time. But the real read here is that we've got our adjusted realized price down here, which accounts for lost coins. This is another model which is attempting to account for those lost coins. We are essentially inside the zone where the average market participant has their cost basis. Now, I would imagine that many people listening to this video, I don't know if you keep track of your cost basis, or if you actually look at your Bitcoin cost basis and you've been around for 1 or 2 cycles, I would hazard a guess that your cost basis is probably not too far away from between these two zones, right? Certainly, mine is, and I've been here for several years, right? I've been here since 2018, and my cost basis is up here in this zone as well. So there's a lot of people who are kind of sitting here and like, if you've been dollar cost averaging and stacking sats for a long time, right? You literally get the average price and your cost basis is likely in this zone. So we're still in this kind of area where lots and lots of people have a psychological attachment here, both on the buy side, because people like to buy their cost basis. People like to buy below their cost basis. But at the same time, if we go higher, people start going, well, I'm in profit, right? So they start taking the opposite action and creating resistance. You've also got a couple of people who've got coins up here, tax loss and all these kind of things. There's all sorts of incentives that have this 30-something thousand level as being something that's going to take a little bit of gusto and a little bit of momentum and time and process to actually get up and above. So anyway, I just wanted to go on that little tangent because I think it's an interesting angle that we are very much in the middle of everything, which kind of explains why there's no volatility in many ways. So bringing it across to the spending side, this is our long-term holder, and particularly on their coins being sent to exchanges. Basically, it's negligible. So long-term holders are doing just absolutely nothing, which again, I think that goes into the bucket of more constructive observations at this point in time. They're just not reacting. They're not taking profits. They're sitting very, very tight. Going back to our short-term holder supply, this is a really cool view. And we'll revisit this towards the later end of the bull cycle. What I've got plotted here in the orange is short-term holder supply, which, as we mentioned before, let's kind of ignore this run-up because this is when Bitcoin is like literally 2010, 2011. The supply is just being mined, right? So let's kind of ignore that. We're pretty much at all-time lows if we exclude this early year, right, in terms of short-term holder supply. By definition, that's all-time high long-term holder supply. Now, down here in red, we have the amount of that supply that is in loss. Now, there's kind of 2 modes that you'll probably see. You've got the bull market where actually most of the short-term holder supply, because it's an uptrend, is in profit. We get the occasional spike higher when you get the corrections, right? Because a bunch of people buy the local top, their supply and loss shoots up, but then the market recovers and you've kind of got this, let's call it a barcode type pattern. But look at the absolute top that actually starts the bear market, right? The thing that actually starts the bear, bang, look at all this supply that goes into loss. It just explodes and captures almost all of the short-term holder supply, right? You can see it here on that first sell-off in May. This is when the bull is dead and buried, right? Really good indicator for that. Now, where we currently sit, we are well and truly within barcode territory. So again, of all the short-term holder supply, a pretty reasonable chunk of it, right? I would say this is just gut feel, 30-odd% or thereabouts. 30-odd% of it is in loss, which means that's kind of sitting in the 29,000 up to 31. And the other 60% is sitting below us. And as we saw on that threshold chart, that could be anywhere from 19K, I think it was 19, yeah, 19.8, all the way up to 29. So the majority of the short-term holder supply is actually below us. So we're not really that top heavy, to be perfectly honest. It's a little bit, but not to a great extent. And again, I feel like this is a more constructive thing to see rather than a bearish thing to see. We're not seeing some kind of major top heavy market where all the short-term holders are in loss. We're just not there yet, right? So again, a lot of kind of things pointing in a similar direction here. So just to start getting towards the end of this, we're looking at here, this is the SOPR metric for, again, so profit and loss multiple on coins that are spent. But the thing that I really wanted to capture, SOPR is coming back down to our break-even level, right? So we're starting to get this correction. Again, we should see it bounce off this break-even level in a true uptrend. But down the bottom here, we've got realized profit and loss being sent to exchanges, and it has just gone to zero, right? This is full bull market. This is full bull. This is capitulation when you get these big spikes, but they're kind of spontaneous. This was the recovery rally in 2018. You've got these occasional spikes higher during these capitulation events. We've got very little profit being taken. Nobody is taking profit at all. It's just dead. There's nothing. And when people aren't taking profit, that means they're probably sitting tight, right? They're sitting on their coins and they're just not doing anything. They're not willing to spend at 30K or at 29K. Now we can actually see this. I love these tools. I think they're so elegant. The sell side risk ratio basically looks at, for here, long-term holders, right? So we're going to look at long and then short-term. Long-term holders, how much value are they realizing? Profit or loss? I don't care which direction it is. Show me when coins are being spent that have a very different price, acquisition price, to the current price. High values, right? When people are locking in large profits, you're going to have a very large delta between acquisition and disposal. Typically, long-term holders wait for the bull, right? So they tend to chop around down at these very low levels, meaning most coins have a very similar price to the current spot price. We're breaking down to near all-time lows. Long-term holders are not spending coins with any meaningful profit or loss in them. It's astounding. They're just flat. Nothing is happening. Short-term holders are collapsing to pretty much all-time lows. They're simply not spending any coin with a major delta between acquisition and disposal. All the coins that are moving really are from the $29,385 range, right? They're just not moving with any kind of significant price delta. And this tells me that the sellers are exhausted. And that doesn't necessarily mean that the sellers are exhausted so we go up. That means that people are not willing to spend at this price range anymore, which means that the price has to go somewhere to motivate sellers of any form. So therefore, price needs to either rip and create profit so people start selling, or it needs to dump so people panic and start selling. This is an indicator that volatility be coming. I don't know which way this is going to go. As we saw on the medium term, things really look quite constructive. I truly do find it quite hard to find a bear case right now. In the short term, however, I mean, any piece of news could come out and this market could go literally in any direction. When it does happen, it's going to move with some gusto because people are just sick of this range. They're ready for it to move. I'm amazed how little it's given back. To me, this tells me there's probably support there. There's a lot of stuff that is constructive. But man, we could get one piece of news. I mean, it could go both directions. It really could. So it's a pretty wild thing. So to close out, I come back to this tool because I think it is the fastest thing I have. Certainly, I think it's the fastest thing I've ever discovered in terms of kind of looking for momentum. Now, this thing here, it's a bit of a, there's a lot of detail that goes into this thing, but basically we're looking at short-term holders because they are the ones who are the most likely to spend and react. Green values on this guy here is basically saying that of all the coins they're spending, profits dominate. Now, why this tool is super reactive is that when you get to these exact points where it's just flat, and you can see we've gone pretty much dead flat, any kind of movement, right? Let's imagine, for example, we sell down to, we're at literally 29,380 right now. Let's say we go down to 29,200. Suddenly a bunch of coins that were like on the fence and at that price, we sell down and they start realizing losses, right? Suddenly your losses accelerate, even though it's very, very small. They start accelerating relative to your profits. So that's the thing this is looking for. It's looking for those inflection points, and it's very, very responsive and very quick. Now, what we have not seen yet is us drop out of the profit-dominated regime. We have not seen a downtick, although it's starting very, very softly to weaken. We're not there yet. Really, you want to see a crossover of this thing, and it's typically pretty responsive, right? We had only just crossed the all-time high when this thing triggered. It also triggered before we even had the sell-off here in May. In fact, it triggered at the all-time high that losses were starting to accelerate, right? Literally at the all-time high. It's super, super sharp. We have not seen that inversion yet. So at the moment, I still see green. I still see profit dominance. I see seller exhaustion at this price level. I see volatility constricted as far as it gets. We're going to move. It feels to me more constructive than not. but be really, really ready because this thing, all it will take is just a slight sell off and people start bailing out. If we do see that, I will let you know as soon as I see something that kind of triggers off this side. But I mean, for now, I'll go to the beach because Bitcoin ain't doing a single thing. It is astounding. I've never seen anything quite like it. Absolutely the sleep. Macro scale, right? Yes, a couple of months in the future, things look fantastic. Hodler's just it's the supply is constrained. It's about as constrained as it's ever been, and we have a halving coming up, right? So all the narrative, all the goods are there. It's just that short-term insanity, right? That just anything could change. And to be honest, it's probably going to be something exogenous that just triggers the market to move in one direction. I think up would be very good. I think down would not be as bad. But in terms of my kind of levels, really, I want it to kind of get stalled in the mid 25s and then find some support. I think that would be perfect and actually quite expected. Getting down into the low 20s, I think it's a low probability. I would be surprised, but it's non-zero. So anyway, there's a lot in there considering there's not much happening. Do let me know if that's kind of a useful overview. Sometimes it's nice to just talk through these ideas, but I mean, let's hope we get something moving because some of us are going to sleep over here. Anyway, hope you have a fantastic weekend, and I'll see you in the next one. Cheers.